Mike, good to see you. How much, if at all, are you and your team watching what happens in Europe vis-a-vis how it might impact our equity markets and your clients' money?
Yeah, I mean, I think obviously there's a lot going on. I mean, the ending of the war would be, I think, tremendous positive tailwind. I think the market's getting in front of that primarily. There's also just, massive political change. In some ways, the win, President Trump in the most recent election almost puts pressure on other countries now to kind of bootstrap themselves. And I think, we have a big German election coming up, and that's part of the story too, is that, they might get more active with their own fiscal policies because they kind of have to. And same thing for China. We've seen that market perform extremely well, kind of on the same basis. But you also have to remember, Brian, that at the end of, last year was just a tremendous year again for U.S. stocks, and we ended up, pretty much on a high note. December was a little tougher, but we had a lot of good stuff happen in the second half of the year, and it may just be that simple, which is that the U.S. market's just, consolidating and taking a bit of a break here. There's some fundamental drivers that are maybe capping us here. 6,100 was a level that we identified back in October. We hit that, and we just struggled with it for the last 3 months. That's not, the end of the world. It's just that's the resistance level. We haven't been able to break through it. Stock market's expensive in the U.S., and what we've been focused on is just trying to make money under the surface, where I think the opportunity set's been tremendous.
You know why I knew international stocks were going to outperform, Mike? Because I had taken them out of all of my retirement portfolios, because a couple of months ago I was like, I've had it with small caps. I've had it with international, fool me once, shame on you, fool me 15 times, but maybe now is the 16th.
Yeah, it could be. Look, every dog has its day, as they say. But the reality is the U.S. market just got tired, and we priced a lot of good news. And once again, I want to make this perfectly clear. Like under the surface, there's been some huge winners in the last couple of months, and it's just and the Mag 7 has really underperformed, and I think that's what's weighing down the index. It's almost the opposite of the last couple of years, where the index did extremely well and then everything else did terribly, and now we're seeing a little bit of a broadening out under the surface. And to me, that's a better outcome.
Well, maybe it's a good and a bad thing. And, I talk a lot, Mike, obviously about energy, and people say, why do you talk so much about energy? Well, energy is the AI story. Even if you don't care about energy per se, you might care about the stock market, which means you care about NVIDIA and Microsoft and Google and all that stuff they want to do, which is powering our stock market higher. All that has to literally come from some form of energy. How closely do you guys watch some of these subsidiary markets? If we see a break, let's say NVIDIA comes out one day and said, well, we just don't know if there's the power to make all these data centers and thus maybe not sell all these Blackwell chips. What's going to happen? Yeah.
And it's not just about AI, Brian, as you know. We need energy for the economy, broadly speaking. And we've probably underinvested in capacity and electricity and other forms of energy. So we've been on that power theme for quite a while. Our analysts have done a great job. And that's probably an area where we're more constructive at the margin than perhaps even the AI directly. The AI story has been really about the enablers, the picks and shovels. That's sort of fading now. And now it's about the application layer and then the power to kind of, drive these new networks.
What does that mean, the application layer?
Software, effectively. So, all of the
like an app lovin', you're not a single stock guy, but is that like why an app lovin' is up 500% recently?
Well, sure. And think about the money that has to move, right? So the money, the large chunks of money were in the hyperscalers and some of the picks and shovels, and then it has to go into maybe perhaps smaller names. And I think that's why you're seeing outsized moves. Some of those are probably overdone. But at the end of the day, all of the value add generally in compute is done at the software level, ultimately. If you think about the internet itself, the long-term value creation was in the applications, right? Not in the infrastructure itself. The infrastructure is the highway, but then the value add is in the software. So we're moving into that phase of it. And then also the adopters, the companies that are actually adopting some of this stuff and are facile with big data sets, they've benefited from AI early on. And the market's smart. The market's been making that shift now for the better part of 4 to 6 months.